Welcome back to The Exchange. Nvidia getting some more love from the street today. Piper Sandler raising its price target to $225 a share from $180 ahead of earnings later this month. The firm expecting results to be in line with company expectations, but sees more room to run as Nvidia alleviates supply shortages. For more, let's bring in Harsh Kumar, senior research analyst at Piper Sandler. Harsh, so there's a lot of demand here already. How much do the changes in China with policy there, how much is that reflected in your bullish expectations?
Yeah, John, first of all, thank you for having me on your show. It's always a pleasure to be talking to you. I think it's a lot of China that's coming up in the October quarter and the next year as we look out. So China, if you recall, was banned starting around the April early timeframe. It looks like we've got a deal for 15% cut of revenue. So we're anticipating that the month of August will be sort of deal making with the customers, getting the orders back on, unfreezing the supply channel. But we still think Nvidia can do something like $6 billion from China in the October quarter, not doing any business in the month of August. And then for next year, we think China could be as much as $56 billion. And even if you give 15% of that to the U.S. government, as is the deal, you'd still end up with a little over $45 billion of revenues that Nvidia can extract from China as a market. So China is a big deal. It's back up. You know, it looks like it's going to open back up.
How much stickiness, how much of a moat are you factoring in for Nvidia overall, based on CUDA and a lot of the rack scale stuff that Nvidia has been working on? I mean, we can sort of think of this in terms of, oh, just raw performance engine to engine, Nvidia versus others, but they're really doing some things in their ecosystem that are different, yes?
Yeah, so there's two things. Let's attack this from U.S. hyperscalers, the open market, and then let's also just talk quickly about China. Let me address the second one first. So China has no alternative. The rest of the world actually has no alternative to Nvidia or AMD or, you know, Broadcom or Marvell, some of the hyperscaler chip providers that are out here. When you think about the U.S. or the open market for hyperscalers, the moat is incredibly important. The software language was incredibly important, which was CUDA, which you mentioned, until about a year ago. But it's now sort of accepted and expected that that is a pretty standard moat. The big moat is now the rack. And you saw AMD shell out something like $4.5 billion to buy a rack maker just to be able to compete with Nvidia because the rack has become so important. And that's coming from the power constraints. And the rack is supposed to help you alleviate some of the power constraints, or what they call as performance per watt. So the rack is now the important thing, and Nvidia still got the best rack, still got the best ROI, still got the best performance.
Are efforts like AWS's Project Rainier, in which they're trying to build out a supercomputer based on their own Trainium chips, a threat to that thesis?
So the custom market is alive and well. Thank you very much. So, you know, Broadcom and the Marvells of the world participate in the custom market. But remember, those are largely limited to specific applications. And when you you can run a general purpose sort of model on it or general purpose application on it, you're not going to end up being very efficient. You lose about, I've heard, 25 to 30% of efficiency along the way if you try to run a non-specific model on a custom ASIC. So I think AWS is largely looking out for some of the massive workloads that it has from its customers. Microsoft notably is doing the same thing with the chips that it's trying to develop, the Maya chip and so on and so forth. And Broadcom, of course, is supplying chips to Google and Meta. But those are all for specific application. When it comes to the wide open world, serving the enterprise, serving the Azure, serving the service providers, you are back at this point still to Nvidia 100% for most part.
It explains why you see there's room to run. Harsh Kumar, thank you.